allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
If you remain standing, Dennis is going to open us in prayer.
Dear Heavenly Father, we thank you for this opportunity to do the business of the town. During this heat wave, we ask that you protect those that have to be out in it. Also, during this time of unrest, we ask that you protect those that are protecting our freedoms, near and abroad. In your heavenly name we pray. Amen.
Amen. Thank you. You may be seated. Sorry we're a few minutes late. We had some things we had to take care of. Do we have a motion to approve the minutes from June 3rd?
Motion to approve the minutes from June 3rd.
We have a second?
A second.
Second by John Purdy. All those in favor say aye.
Aye.
Opposed? 5 affirmative. Do we have a motion to approve and ratify the fund report and docket?
Make a motion.
Motion by John Purdy.
A second.
Second by Chad. All those in favor say aye.
Aye.
Opposed? 5 affirmative. Okay, old business. First thing on the agenda is we are going to talk about the golf carts. I think everybody up here had a chance to see the sample ordinance that Lee sent out and kind of peruse it. And so let's start a discussion on thoughts.
Well, I think one of the very first things is I did appreciate the petition that came. I did go through, like I know that Dennis did, and looked at, who were directly New Whiteland residents and all of that. But what I did do in the meantime is I have spoken with the neighbors in Tracy Ridge. Not all of them, of course, but there is more of a sense of I don't care, a few that are there and a few that are in favor, and a few that said, if we had one, I would have a golf cart.
And that's kind of the way I am. Now, I will say this. I think we are now one of the last communities that does not have them. And in speaking to over at Whiteland, one of their council members, that is on their next agenda. So they are probably going to start having golf carts as well. And I'm kind of the same way, John. If I'm okay either way, but if we passed it, I would probably have one. A lot of communities, people are using them just because it's easier to get around. And I've heard a lot of people back and forth about, well, they're dangerous. Well, and you know what? If the wrong people have them, bicycles are dangerous. And so I think it's one of those things that they just have to be policed properly. The way the ordinance is written, there are very stringent regulations in place. I know a lot of people have come to these meetings and said, well, what about the 12-year-old kid that's out? If there's a 12-year-old kid out, then guess what? Mom and dad are going to lose the golf cart because they're not allowed to be on the road. You have to be a licensed driver. It has to have insurance. There's many, many stipulations written into this ordinance to make it as safe as humanly possible. So, just my 2 cents.
Joe, have you read the proposed ordinance?
Yes.
Are you comfortable with all the safeguards? Should there be something in that that's not in it at this point?
Well, what I would like to do is I'm going to compare it with some of the others. I know there's 2 other ones. I got one from Speedway. I've got one from Franklin. And Edinburgh, I spoke with their chief down there. And what I'm going to do is, if it's okay with the council, is do a little bit more research on it myself and see if there's anything as a safeguard that we would want to put in there for the future. And the key thing is the safety right now. That's the only thing the whole police department is concerned with that. But if we monitor it right, we have the right rules in place. And this is a good structure that we got that's been sent out to us.
Do you feel like it's realistic for your officers to enforce this? They can be active enforcing it when we do see the 12-year kid tooling down the road on one?
Yes, sir.
Okay, okay. And I've asked in prior meetings, but I think it makes sense to ask it again. Overall, I think you as the chief of police support this. Is that a fair statement? Assuming the right safeguards are in place?
Yes, it is. It's a fair statement, yes.
Okay, well, that's important too, it really is. The one thing, and the way the draft is written, I think this is already disallowed. Running up and down 31 or crossing 31, I think is a major problem. We've already got enough accidents at Tracy and Whiteland Road, and some of those involve injuries. A lot of them involve totaled cars. You put a car or a pickup truck and a golf cart in one of those accidents, and whoever's on the golf cart's gonna die.
Actually, Lee and I had that conversation yesterday, and if you look at, I think Franklin. if I'm
Oh,
not-
sorry.
if
I
I'm-
thought you were going to find it in this ordinance. Go ahead, sorry.
No, what we had discussed is, if I'm over here, or no, over there, and wanted to come over to Hardee's, what most municipalities will do, you can cross at, and this is what Lee threw out, because we have several places that you could cross without a light. What our proposal would be is, if you're going to cross 31, it has to be at a light, with the light. You cannot run up and down 31. That's just not allowed. And the only time, what is it? What's the one that comes out of the Park Drive? Parkview. Yeah. You would not be allowed to cross 31 at Parkview because there's no light there. I've been T-boned there in my car. And so that's...
What are your thoughts on that, Joe?
Well, I agree. That's a dangerous intersection. One of our farm cameras is right there at 31 and Tracy where the light is. So if there was anything that happened, we'd be able to go with those cameras. It's got a still camera and also a video camera. But I think that stipulation would be a good one to add in here.
Stipulation that you can't cross or run up and down 31 in one?
Cross satellite only.
We have that in paragraph 8 of the current draft. We have that mentioned, and the way I wrote it to start with was that you can't drive on 31 or across. And I got to thinking, like John said, I think folks who have these are going to want to be able to get from the west side of town to the east side of town. That'll be frustrating if 31 ends up being a boundary that can't be crossed. But if we said in the ordinance that the 31 may only be crossed at Whiteland Road and Tracy Road, to your point, John, an off-road vehicle, golf cart, whatever it is not going to fare very well against a car. And it's dangerous because it's a state highway and cars moving really fast. The safest alternative is to make it be at a lighted intersection. We have two, right? And so that would be one of the requirements. That's as good as it could be, unless you say you cannot cross 31.
What does Franklin do in that respect?
I don't know.
Well, I do know the trail that goes underneath 31 at Blue Heron Park, they can now drive golf carts up that. But and that leads me to wonder, are they not able to cross at a light? I'm not in favor of cross. I'll be perfectly honest. I'm ambivalent to negative on this, and not because I think it's dangerous. I really do. And I also look at it and think, if you're on this side of town, you want to go. We don't have a lot of restaurants. We don't have a lot of shops. I understand you may want to go see a family member that lives on the other side of 31 in town. I get that. And so overall, I'm ambivalent, but the safety concern is a big one. I think, there's enough car-on-car accidents at both of those intersections. You can't hardly go a week without somebody getting into a major accident at those intersections. I'd hate to think about a golf cart crossing those roads, even at the light, with the light.
So go ahead. No,
Go on.
I was going to say, so I went through, looked at Johnson County, Franklin, Greenwood, and Trafalgar. All have ordinances. Franklin said not on paths, but seeing what I found online may not be the most current and accurate that Franklin uses. Basically all of them said no sidewalks, no paths, no parks except where cars are allowed. That was one of the notes I had, was if we're going to allow crossing 31, that it be at and I don't remember, I think it was Franklin that said a electronic controlled, they had some verbiage there basically saying at a stoplight. And because I would hate to see somebody try pulling out down there by rascals. That wouldn't go well. And then we'll let Joe weigh in with his, after he has a chance to review it, but there were a couple things that, from the safety side, most municipalities require lights, tail lights, turn signals, seat belts. Yes, there's quite a bit there. I think the ordinance Lee came up with is a good combination of all of them without getting too terribly strict. But then the one thing that I saw was if we're gonna require headlights and taillights after dark, do we include turn signals in that? And then also, do we require rear view or side view mirrors all times? And that was, the mirrors were a safety part that I thought about for me. And then Lee, I do have a question in between, just above paragraph 8. It starts off, golf carts and side-by-sides owned by non-residents of New Whiteland that are registered as may be required in Johnson County, the state of Indiana. If a non-resident has a golf cart and it's registered, but was the intent there that if it's registered in Franklin, it's legal here, or?
Yeah, I don't know whether that's needed in New Whiteland. I think if somebody visiting comes with a golf cart, if someone, I don't know, with a recreational vehicle, a pusher that's pulling a golf cart with it or something like that, well, of course they wouldn't be doing that if they're in Johnson County. If someone from Whiteland drives over into New Whiteland and they have complied with anything required by the county and operated in compliance with our ordinance, it doesn't have to be registered in New Whiteland for them to drive it around in New Whiteland. I think that's actually what that is meant to address.
See, that's what I was getting at. So we almost need to kind of mimic New Whiteland rules. And what if they allow driving on 31, and then we pull them over that they're Whiteland side, or vice versa, or whatever.
Well, in talking to Tim, I don't think that is gonna even be an option.
Yeah.
They're, I think, leaning more along the lines of what we are. So I don't think that'll be a problem. But again, if they are in the town of New Whiteland and they're on 31, I don't care where their golf cart's registered.
Which would be the same, all other local ordinances to visitors apply.
Yeah.
So why wouldn't the golf cart ordinance apply?
Yeah.
Can you drive these things on county roads? Like, could somebody come up the county road from Franklin into Whiteland?
I suppose.
I mean, are they legal
according
on
to
county
the
roads?
unincorporated Johnson County, it has to be registered with the county.
That's what this is meant to address.
Right.
That they drive into New Whiteland, so they're not registered with New Whiteland. But so long as they're registered with the county and comply with our rules of operation, then they're not violating our ordinance.
I want to talk about what you were talking about as far as like the safety part of it, crossing 31. And this hit me this past weekend because there was a bicycle ride that came through town. And if you look I was out on East Washington Street today out near Greenfield, and they put these real nice bicycle lanes out there, but then they have these signs that say bicycles can drive the entire lane of the road. Okay, to me, that is a lot more dangerous. I would rather see a golf cart crossing 31 that'll do 20 miles an hour than 3 bicycles riding side by side just because they can. And that's what we ran into coming in Tracy Road on Saturday. And it's like, this is crazy, but it's allowed. And I think we can only provide so much safety. And then I think common sense has to take hold for people. So, but either way, I get where you're coming from.
Sure.
Absolutely, I do.
Too. I don't like feeling like the heavy hand of government, to be honest with you, but like I say, that would be an overriding concern for me. Like I say, overall, it's probably fair to say I'm negative on it, but that's a personal preference, and that shouldn't dictate what happens in town. But the safety issue across that highway is a major concern for me.
For tonight, I get the sense that there is sort of a predisposition by a majority of the council to allow golf carts if we can present an ordinance that addresses the concerns. I think Joe, don't let me speak for you, but what I think I hear Joe saying is he wants a bit more time to research this. I assume you're going to give him that. The ordinance that I have before you tonight does not allow crossing 31, and my sense is you're probably going to allow that under some circumstances. I don't know that there's action that you can take tonight, but I think if you're saying that the ordinance that I have drafted for you and sent to you is getting us close, and Joe has time to research this a bit, between now and August, I think we can revise that based on his input, get another draft to you to present in August. Does that move this issue along to the extent you wanted to tonight? Because I don't think we have an ordinance tonight in your hand that you're going to introduce, because I don't think it's fully baked yet.
Yeah, especially hearing Joe say he'd like to have some time to look at it, maybe add some things to it. I definitely want to hear that input.
I'm gonna do something that we don't normally do. Normally open to the public is you wait until the very end and then you get to talk. But is there anybody here this evening that came here because you specifically wanted to speak about the golf carts? We've got about this much stuff on the agenda, and for you guys to sit here all night long to wait to talk about something we're talking about now. If there's somebody here specifically that wanted to talk about the golf carts, I'm gonna go ahead and give you ample time right now if you'd like to.
Well, Gina Luttrell, 829 Westview Drive. I didn't come I just come because I come. Well, I didn't come for the golf carts, but I do have a concern with the golf carts because with any of the ordinances in town, multiple rentals, they don't know the ordinances. So if they see the golf carts going around, they're not gonna be aware of what the rules are or abide by. That would be my concern as a homeowner.
Okay.
How would they know what the rules are?
Yeah.
If they see golf carts going around, they're gonna put their kids on them. Not gonna know the rules. That's the only concern I would have.
Okay, and you know, that's a great point because before the meeting tonight, we were having a discussion about the no parking between 2 and 5 because that was something Dennis noticed is there's not signs everywhere that say you can't do that. And I think that's something that when people move in, they should be made, because I know there's a packet that we give everybody that moves in once they get their water turned on. If we give it to them and they choose not to read it, that's kind of on them. But I think all it takes is either one good stern warning to say, hey, you're out here and you're not allowed to be, because the police will be looking for that. You know, if they see a 12-year-old out there, hey, you don't have a driver's license, you're not allowed to be here.
Well, just like limbs as well.
Sure.
Which I get it. You don't know, you don't know.
Right.
You know.
Yeah, and that's a legitimate concern.
That's the only concern I have.
Okay, thank you. Anyone else? Wow, you all came here that's awesome. Nobody ever comes. Okay, so are we gonna just let Lee and
We'll get to you in advance of the August meeting, a revised draft of a golf cart ordinance, and hopefully it'll come close enough that you can introduce it in August. And if you're so inclined, if it just really suits you, if you wanted to go ahead and introduce it at the same night, you could. But I think this is something that's been simmering long enough, that is important enough that you want to be deliberate and methodical about this. So, is that okay?
Yes.
All right.
Okay, I wanna, I think it is, yeah. Oh, okay, yeah. The S&P engagement letter that we got, which was fantastic news. I believe this is when we started doing our bond council and we were looking at the bond project or the wastewater project. We were hoping to be able to come in with a good rating, and we got an exceptional rating.
Yeah, really great.
So that, in the long run, is gonna help our residents as far as rates. But in order to do this, we have to have an agreement and with Robert Reynolds. And I'm looking for the amount on here. 22,250, yeah. So I know this is something we've discussed in the past, but we have to have approval to have Robert move forward with this, with the bond bank.
I'm not sure that this was the one with Robert Reynolds. This was the one that you signed a couple weeks ago. They were ratifying that because they needed it signed urgently.
We talked
It
about
was
it.
it was just sent forward
Yeah.
by him.
That's-
Okay.
It's been
Yes.
paid.
It was
Okay.
something we had to have, and relates to that rating that we got, and because of the sense of urgency, it was approved, and John, I think you did sign it. We need action from the council to ratify that decision.
Yeah. So that was at the last meeting that you were not able to be here. So kind of retro back, we just need to reaffirm this.
I'll make the motion to ratify it.
Okay, we have a motion,
I will second.
second by Dennis. All those in favor say aye.
Aye.
Opposed? 5 affirmative. Okay.
Nice little melody to
Wow.
break things up.
That's our interlude. Okay, the bond financing insurance.
Yeah.
That is also them, I believe. This is, again, is something that we have to, what was the explanation of, it's insuring, or it's,
So, I'd say I was involved in some email from Rob Reynolds, so basically it's almost like an insurance for the bondholders that if for some reason we'll call it default on a payment or something like that, they're guaranteed their money. They originally weren't gonna go with it because they didn't think it would really amount to anything when they were thinking we were gonna be that triple B plus rating.
yeah.
But since the rating that came back was as good as it was, he went ahead and explored those options. And that's kind of what that was. Looks like,
It'll buy down our interest rate a little bit.
Yeah,
And so, because we got such a good rating, we're kind of eligible for it, or there are insurers out there that are willing to insure the town's obligation to repay the bonds because we've been rated so high. They have really high confidence in issuing insurance on the town of New Whiteland because we were rated so high. And if we buy the insurance, we'll be able to sell the bonds at a little bit lower interest rate because the bond buyers will perceive this they will be at less risk because the repayment of the bonds is insured. Mm-hmm. And so they're willing to accept less interest in exchange for a reduction in risk. And the cost of the insurance relative to what we will save on the lower interest makes it a pretty simple decision.
yeah, it's $17,159 for the insurance, and it's saving us over $30,000 in the long run in repayment. So,
And I think what we know too is it's negligible really, but it's going to cause our rates to drop a few cents. There's a trickle down from this that saves us money on the interest expense, and as that flows through to our rate, it reduces the rate slightly. I mean, it's hard to conceive of any reason not to do this,
Well,
right?
Yes.
in summary, John's right. So we pay 17,159. It saves just less than 30,000. So we're 13,000 to the good in the transaction. There's no reason not to do it.
Yeah.
And I don't know, but I doubt it, but you could see why maybe it would cause more potential buyers of the bonds to be interested in it because, in addition to everything else, they're ensuring their repayment.
There are some financial institutions, the bank I work for buys bonds like this from time to time, and we don't require it, but there are financial institutions that won't buy without the insurance.
Makes sense, doesn't it?
When your bank would be looking at buying bonds, would you be more receptive to buying if you knew somebody had this?
Oh, yeah, it's a positive.
Okay.
There's no question.
Okay.
But in this rating range, we might be a buyer anyway.
Okay.
But again, having the insurance does make it more attractive.
Yeah, that's right. But being in that rating range, we can get insurance where we otherwise wouldn't have had we been too far below that, or it would have cost lots and
It would
lots
have
of
cost
money.
significantly
Yeah,
more.
right.
Okay. So do we have a motion to accept the $17,159 premium?
So moved.
I'll second.
Okay, you guys are throwing your voices.
Yes.
We have a motion, a second, I think it was Shalotsky.
It was.
And John Purdy. Okay, do we have, all those in favor say aye.
Aye.
Opposed? 5 affirmative. Thank you. Matt, bids for I&I?
We're gonna push that off till the August
Okay,
meeting.
okay, very good. Angela, any other old business? Lee? Chad?
No, sir.
John?
Nope.
Tim? John?
Yeah, Dwayne, where are we at with the Whiteland sawmill centerline roundabout?
So everything has been awarded through the MPO and all that type of stuff. The way the MPO works is you can't start the project, because it's a 3-year project or a 3-year timeline on it all. Basically, the project won't start until spring of 2028.
They're still in design. I know I got an email about the utilities as far as conflicts. They sent it out to all the utilities throughout the area as far as wanting to know what could be conflict. They sent out kind of a draft plan set that has that stuff in it, so.
Anything else, John?
No, sir.
Dwayne? Matt? Dave? Joe? Gosh, moving right along. New business, health benefits. Bob?
That's me. Good afternoon, everybody. We provided a document, I think Melissa may have shared it with you a week or so ago. Just curious, did you receive it? We didn't have copies, I can share it. Do you need a copy?
Yeah, you got one.
Anybody else? No,
Thank you.
okay.
I'll take one because you brought it.
Sure.
John, you have one.
I do, yeah. Thank you.
Been trying to work off my phone and it's not working real great.
So before I lose you in the document, just a high level. Just at a high level summary, we were facing a less favorable renewal for the town's health plan through Anthem for this year. It's really directly related to our overall claims experience and what Anthem is projected in terms of future claims in the next 12 months. So we did illustrate and provide a bunch of options for the before we go there. We did also send an RFP out to all the major health plan options that are available in the state, and we provided a summary in there. Page numbers are in the bottom right corner, but the summary of the markets that we went to are illustrated. Excuse me. Page 7. That was all the markets we went to. Unfortunately, we see a lot of the other markets likely declined to quote. So after they went through their underwriting review process, they felt they could not offer an offer that would be financially better than what Anthem was offering for your current plan or option. So unfortunately, that really left us with Anthem, our current carrier. We did illustrate a bunch of options for consideration. As you probably know, we're the town currently offers a PPO plan. If we're to maintain that plan, and if we want to jump to page 9 of 28, if the town were to maintain that PPO plan, the overall increase was like 28%, based on 17 employees enrolled and some with families. That was about a $62,000 annual increase on that plan option. If we want to maintain our same plan, then we provide options that would drop the overall increase from 20% down to 4.5%. The 4.5%, the lowest option, would be moving to what is referred to as a consumer-driven plan. It's called an HSA plan. Makes participants eligible to open up an HSA account. The town can provide some money to the HSA account. They can put money in the HSA account and help fund their expenses. But that drops the overall offer down to 4.5, and that's on the far right column if we were to move everybody to that option. One of the scenarios we talked about was offering a dual option, offering two plans, a PPO plan, along with this HSA plan that's in the far right column of your illustration. And we did illustrate a dual option for your consideration, and that is on page 11 of 28. So on page 11 of 28, on the right-hand side, at the top, it says alternative one dual option. You'll see an Anthem PPO plan illustrated and an Anthem high-deductible HSA qualified plan. What we try to do in the illustration is if you see things highlighted in pink, that's a little bit of a benefit reduction compared to the current plan. So for example, on the proposed PPO plan, the overall deductible is slightly higher, $3,000 versus its currently $2,500. And then we highlighted things in green that was more favorable than what the current plan is. So for example, the HSA plan, the overall family deductible is lower, co-insurance is better, and then max out of pockets on the HSA plan is better. So max out of pocket basically is inclusive of all participants' cost share, deductible, co-insurance, co-pay. So if someone doesn't have a lot of healthcare costs, that's the most you pay. If you hit that max out of pocket figure on your sheet, Anthem pays 100% the rest of the calendar year. So in this scenario, we illustrated for your consideration on 1128. If you go down those two columns, you see the rates, the tiered rates for each plan. And what we assumed was about half the population would go in the HSA plan, and the other one would stay in the buy-up. So in the bottom left corner, we sort of broke the enrollment to 17 and said, okay, we have 10 employees on the plan today, 5 will stay with PPO, 5 will go with the HSA. The ones with dependents, most we kept on the PPO, but we said, okay, 2 families would switch over. So in this scenario, if we were offering this dual option, that enrollment actually played out. We won't know until we go through enrollment. The increase drops to like 11.5% here. So that's about $25,800 annual increase before you decide how to share that with the participants. So that was the option I think that had a lot of interest. And we did model out a premium share scenario for that option. So if you jump to page 17 of 28, this is sort of the premium share scenario for that dual option. Again, we're sort of assuming the same enrollment like you just saw. There's a lot of numbers on this page, but what we basically did was we matched the current town's premium splits on the plan in terms of what employees pay for the plan versus the town. We match those percentages. So if the folks do stay in the PPO plan under employee share column, these are monthly numbers, but you'll see what they're paying today. Like singles 137 and change a month, will go to 161 a month. So it's about a $14 monthly increase on the PPO plan. If you go to the HSA plan, you'll see again what they pay is 137 a month. It goes to 144, so it's a little bit less of an increase. And then the concept is, take some of that money you would have paid for insurance with your HSA. In this illustration, for your consideration, we also modeled out if the town provided an HSA contribution, and what we modeled out was $1,000 per employee per year. So 1,000 divided by 12 is roughly about $80 some a month. And that's assuming these 7 folks from the HSA and what that cost would be. So overall, once you factor in the HSA contribution, if that were to play out, it's like a 16% increase to the town. It'd be about $26,000 for the next 12 months. And again, we won't know what employees elect until you go through the enrollment and let them pick which plan they want. That fits best for them and their family. So this dual option was the option I think that was most intriguing and that hopefully fell within the town's budget. We could always model out other scenarios as needed. So that's a possibility. And then the other premium share scenarios in there, we illustrated sort of two options for each scenario, I believe. We'll sort of share the increase, or maintain the premium splits. So we sort of showed those different options for your consideration. The other options, obviously, are single plan options, PPO plans, or all HSA. So that's what we had for you. The dual option, I think, had the most interest from our meetings and conversations, for your consideration.
One other thing that also is a possibility, because one of the big things is whenever you go to the high deductible health plans, is getting people to invest in their own health care. And what I mean by that, the HSA, so you can actually set it up to where, let's say, for example, we do it for $500 to the employee, and then we'll match dollar for dollar an additional $500, because now you put $1,500 into your HSA. And you can actually increase more. What I've done is as certain insurances and things have fallen off, I have moved those premiums to the HSA because I keep the HSA. So if I'm having good years with very, very few claims, you can also get yourself to almost a self-insured type of thing with a healthy HSA, to where you've got the deductible and out-of-pocket covered.
No, those are all valid points. HSAs are also, HSA accounts can be used for other things other than just medical. You can use them for glasses, you can use them for dental work. The list of IRS eligible items is broader than just a medical plan, as you're probably well aware. So yeah, there are some definitely benefits to the HSA, and tax benefits too, as well. So in terms of the company, the town's contribution to the HSA, just to make you aware with the way the rules work, if you were to put the entire amount, whatever the amount you decide, into the employee's HSA, and then if he and she were to leave, that money's gone, you can't get it back. So we do have clients we work with that may have a higher turnover rate with their employee base, and they'll take that annual amount and they'll break it down either per pay, monthly, quarterly, if they have a higher turnover rate. We have clients that have low turnover, and they're not worried about it, and they will front load the HSA, but they do understand that if someone does leave, that money's gone, you can't get it back. So just to make that point clear, and you have flexibility in terms of, if you want to make a contribution, you don't have to. If you do, and then how you distribute it into their account.
One other point is let's say you do leave. That HSA goes with you. Okay, so it's a good investment because the HSA does travel with you, so you go to another organization because you're responsible basically for setting up the account. We just become available to be able to do matching contributions or lump sums. But like I said, with that particular option that I threw out, you're going to get $500 no matter what, but try to incentivize you to do more than that, contribute on your own, because it will grow.
I like the option of the dual, just because one of the things that a lot of people complain about is, this is my plan, I'm stuck with it, it doesn't necessarily work for me and my family. I was fortunate enough, place I work, I have an HSA, and I'm on a medication now that, if it wasn't for my HSA, where I had saved money over the years, it's over $200 a month coming out of my pocket. Now granted, it's still coming out of my pocket, but I don't notice it coming out of my checking account.
Right.
And it does make a difference. And like John said, I would be more inclined to, instead of saying, okay, we're gonna give $1,000 to everybody, break it down to like, okay, $50 a month is going into everybody's, which comes out to $600 a year. If you contribute, there's another X amount of dollars available to add if you contribute. Now, is that something we can do without getting in trouble?
Yes.
Okay.
Yeah, so you can offer a base contribution amount that everybody gets, they don't have to take any action to get that amount. And you could offer a variable contribution amount that is based on if you want to do a match. A lot of employer groups we work with will try to encourage healthy behaviors. All health plans have to cover annual program here, 100% no cost share, regardless of your plan, HSA, PPO, HMO. So a lot of clients will say, if you go get your annual physical, just have the doctor or nurse practitioner sign this form, turn it in, document it, and then we'll give you the next dollar amount into your HSA for completing that. Now, if you want to offer that piece for the people on the PPO plan, you can too. You just can give it to them in their paycheck, or at least a debit, gift card or something like that. I'd have to double check, but I think the IRS level in terms of gift is like $600, $650. If you give more than that, then you gotta disclose it, file it, but if it's below that, you don't have to report it. Does that make sense? So I'm just talking about the people that stay on the PPO plan. Or you could just say, this is just for those on the HSA plan, we'll just do it. So you have flexibility. You can do whatever you want in terms of the employer HSA contribution.
You can contribute to your own plan up to a maximum that's regulated by the IRS. Okay, but up to a maximum if you want to get more secure quicker.
Yeah, we did list the IRS maximums in the document for 26 and 27 for your reference. It's based on your level of insurance coverage on the plan. It's not your household. So if you're married, and I know we have 10 people, 10 employees or single coverage, if they're married, they can only put up to the single limit on the HSA with the IRS schedule. They can't do the family limit with single.
You can put more in. You can put more in, but it's taxable.
Actually, you can't put any more. You're limited there. You'll get penalized in taxes.
Well, that's what I mean.
You're right.
You get a penalty. Been there, done that.
Yeah.
So what did we put in the budget this year for this increase? Angela, do you recall?
We usually do budget an increase, usually probably around 30 or 40%, just to like pad it, but
Is that what we did last year? Do you recall?
I believe so.
Okay.
Usually at the end of the year when we need to transfer to other lines, we use that.
Well, did you have more?
No, if I understand right, if we offer both plans, everybody stays on the PPO, we still go up 28%. Is that accurate?
It's gonna be 16.8. So on that page, we have the increase by plan in a pink box on the first part of our total premium.
What page are you on?
17 to 28.
You know, the copy I've got, the pages are all out of order, and I think
Oh,
I'm
I
missing
have
some pages.
33 pages.
Do you, okay, thank you.
And
But
mine's,
the information's still
mine's
there,
in
it's
large
just-
print. So
That's true.
The one I
Not-
have
not sure what they were gonna.
Oh, I'm
So
sorry.
when you're saying,
Well, but my question is, the 11.8, you assume the breakdown of who's gonna take what. Is that 11.8 based on that? So if everybody says, no, I'm sticking with the PPO, I'm not going to the HSA, 11's not gonna hold, is
It's
that
gonna be
right?
16 and a half, and that's probably back on 9 and 28 for you have page numbers.
It's 16 point, it would be a $36,000 increase roughly. If everybody stays on a PPO plan, that was illustrated through option, it's 16.7. This is if everybody stays in this plan.
So if we change to that plan, PPO plan, we still save, we have less of an increase.
Yeah.
We don't save anything, but if we can get HSA people, then.
Oh, yeah.
And there, I do have one statement and one question for Matt and Dwayne, without throwing them under the bus. But an HSA, when we were back reworking the pay scale for police officers, that was something Joe brought up that other municipalities provided, was insurance with HSA plans. So this does kind of fill that for those people that are interested. It's another option so that they don't feel like the worst insurance plan is getting rammed down their throat. But if I remember right, and if I'm wrong, just, I know you won't hesitate to tell me. But I was thinking our current health insurance plan, once we leave it, we can never go back to it, correct?
So to say, I asked that question in our meeting with him, I'll let him try to answer that.
Yeah, so the question really goes back to the Affordable Care Act. You're a small employer group that falls within the Affordable Care Act provision, which is companies with 2 to 50 employees.
Okay.
So when the Affordable Care Act was passed, if you recall back then, the promise was made, if you like your plan, you can keep it, you don't have to move. So you're in what we call the legacy block with Anthem. So Anthem has a block of business, including your part of it, it's called legacy, which are employer groups like yourself that are below 50, and they're still in sort of the old product division. And the plans we're looking at as options are the plans that are offered through that legacy block. So we had other Anthem options we asked quote for, but unfortunately, you'll see on the summary sheet that are all not competitive with clients.
Yeah.
So this is, you're still in that legacy block. We're just looking at plans that are available to clients, employer groups that are available in that legacy block. Does that make sense?
Yep.
So you can change your plan as long as it's a legacy plan.
Okay.
So these plan options are all qualified and eligible for your consideration.
So if we came out of the legacy plan, the price would go up?
If you were to go out of the legacy block, yeah, I mean, you're fully insured today. If you're out of the legacy block and just go with a typical Anthem salary plan, the rate increase would be like 80%. It goes back to the community rating, how things changed. That's why Anthem offers these other products that are called balanced funding and a new one, multiple employer welfare option, which allows them to give you better pricing if they feel you're a good overall risk. But again, if you look at the sheet, they decline. They would not put you in those other blocks because they're concerned about projected claims going forward.
So the dual thing, that's part of the legacy.
These plans are all part of the legacy, yes.
Okay.
Yep.
This is John, we're obviously fishing in your pond right now. I don't think we've ever done a spousal carve out. What would that do to a premium if we did? The spousal carve out says if you've got a working spouse and that spouse can get coverage through their employer, that spouse can't get coverage with us.
I like the concept of spousal surcharge better when it comes to rating, because some of those plans out there are horrible. So what happens is because we're taking on more of the risk of the spouse, then you take on more of the risk of the premium.
So the 80% for employee, I think is pretty typical. That's in the zip code we're in as the bank. The 70% for dependents, my perception is that's high. Is that accurate? It is compared to what, of course, I have a
Each
universal
plan's gonna
one.
be different.
What does the school do?
I can't tell you right off the top of my head. I'd need to have the plan document in front of me.
If
I'll look and see.
If we were to do a spousal
We do have a
coverage.
lot of clients that are local units of government or government employer groups that do what we call spousal exclusion, spousal carve out. And that general language nowadays is just, if your spouse is gainfully employed and he or she has access to health plan benefits to their job, they're just not eligible, regardless of what the plan is. But at his point, sometimes someone finds out the plan that's available through their job is not what they thought. But so yeah, that's the rule. Why do a lot of government employer groups do that is back to the premium share arrangement. The town pays the majority of premiums on behalf of the employees, so you don't want to be subsidizing a company out there that's not, doing a fair share for their employees. So that's the whole argument. You currently have 2 employee spouses and 3 families. You're talking about potentially about 5 spouses that would be, if they're being employed or not. I know we've had this conversation.
And they may not be.
Yeah, they may not be. So, yeah.
Just so we have some would you be able to estimate what it would?
The savings to the town?
Yeah.
Well, let's see, under the current plan, before the renewal, the current cost to the town for an employee spouse category is a little $1,000, $1,082. So if that employee had to drop his or her spouse because they had a job elsewhere and they went to single coverage, the town's cost would drop to $551 a month. So 1,082 minus 551 would be the savings. So it's roughly, what's that? $532 a month savings. So times 12, you're talking over $6,000 savings. So where I'm getting these numbers, if
you go here to 12.
What page are you guys on?
And then this is the current cost. This is the current cost up here for the town. This total premium is here, so it's not the town spouse. This is just for single and spouse. So if these 2 employees drop, and the employee switches to single, that's what you're saving. That's the premium to the town pays. So you have 3 families. This is what the town pays for family. If they were to drop the spouse and drop down to say employed children, that difference there, 1468 to 937. So call it $500 or roughly.
does that make sense? That's what you save. So just call it roughly $500 a month. would be roughly the savings if the employee changed from employee family to employee children, or if that employee spouse changed from employee spouse to employee only, it would be the savings to the town. So 500 a month times 12, 6,000 times, what did I say, 5? So if all of them dropped, that'd save you $30,000.
Which is significant. What does the school do in that respect?
That's what we do. Okay, and we have spousal surcharge, not spousal carve out. And it is a rate different. Okay, so we will show what happens if there's no spousal surcharge through each of the 4 tiers, or what it costs to have the spouse on, and it'll show spouse, children, and family plan. And yeah, it's an increased rate because what you're looking at is premiums to an extent drive claims. You got to be able to pay the claim from the premium offsets. So
So, yeah, spousal surcharge, you're gonna charge them more because their spouse has access to their
Could
senior
get
plan.
covered
So
elsewhere.
you would come with a figure. Obviously, the premium savings is 500. You can say, well, if you volunteer drop off, we'll give you $250 a month.
Well, and I'm
You
not
fund it
suggesting,
through that savings there.
I'm not suggesting I
Or a
necessarily.
surcharge, we're gonna charge you $250 more a month to keep your spouse in the plan.
Right, and I mean, you mentioned 500, and that's right for employee and spouse, but employee and family, it's over 900 per month.
The current cost is $1468 the town pays, and if they drop down to employee child, it's $937.
But I suppose the children have to be covered on one plan or the other. Okay, I'm just thinking through, I'm not, yeah.
Yeah. So we've had a number of employer groups do it, local governments, large and small, and the savings can be significant, and then it gets to,
We've had similar increases. In fact, we had an enormous increase this year with a lot like this, with Anthem. And there's a handful of things we've done. We've got I can't even think what it's called, a company that comes alongside Anthem. It's ERTL, E-R-T-L. I don't know if you've ever heard of it.
yeah,
But they help employees manage their health. They come out twice a year, do blood draws, give you advice, that kind of thing. We've also done a spousal carve out. So I mean, because it, it's an enormous expense. It really is. And again, this kind of an increase, a $60,000 increase, is that's hard to support. But again, I'm not necessarily saying I want to go down that road. And again, John, this is more your strength, obviously, given your background. I mean, what are your thoughts on?
I think you go with the dual plans because they're giving you credit for offering another choice for people to go to. All of those things are assistive with rates. When you go messing with deductibles,
Right.
those sorts of things. I do know for a fact that it's one of those things that we will have to provide some education to our employees, because it really is a change in mindset when you go from strictly PPO to the people who would be considering the high deductible health plans and HSA.
Yeah, the irony is we were on PPO for years. 7 or 8 years ago, Anthem pushed us into an HSA. Now they've pushed us back to a PPO.
Okay.
It's hard to understand. It really is.
Yeah, we haven't gone back. We don't even offer PPO.
Yeah. Well, they've financially it's a fine plan. It was a fine plan before. I've had an HSA before, and you're right. It takes some getting used to some planning, but it's a good plan.
So if we opt for the dual plan, we're looking at an overall 4.6 increase.
well, what we modeled out was like 11.5% increase. And what we modeled out, once you added the towns, if you did the $1,000 HSA contribution, it's gonna be like about 16% increase.
And what page is that on?
1728 is the page for the dual option scenario.
Gotcha. Okay. Thank you.
Modeled out.
Yeah. Okay.
So again, that was what we modeled out. That was keeping the overall share of premiums the same in terms of what the employee pays, percentage-wise, they're paying what the town pays. And again, assuming sort of a 50-50 split of enrollment, that was how the numbers sort of play out. Obviously won't know, but to his point, if everybody stays in the PPO plan, it's actually gonna be roughly about the same, 16%. But if you know, and if more go into the HSA, that's fine too. It's roughly about the same once you factor in the HSA contribution.
So the
But again,
six,
you can decide the HSA contribution, you know, that expense for, you know, 7 people, you know, 7 times $1,000, $7,000. So if you decide that, you know, you could do 500 and, you know, 3,500 for 7 people, or whatever you want.
okay. So what does that break down? I mean, you said 62,000 at the 28%, so what is the 16%?
26,700 total. That includes HSA contribution of 1,000.
Okay.
Yeah. Now the other thing that we had was dental vision was up. Principal had the best dental vision quote as a replacement for us for a current carrier. I'd say roughly about over $2,000 annually. So we were recommending moving the dental vision to Principal to get a little bit of savings. And there are other lines, life and disability, were rate hold with One America, paid well. So on the dental vision, we were recommending considering moving to Principal to get that savings on those 2 plans.
Did
Yeah,
we-
there's similar dental plans, similar vision.
With the vision plan, did we investigate VSP?
Yeah, it is with VSP. We keep the same network.
Okay.
Yeah. It's maintaining the same network we have today. With Principal, it's just moving from Delta Dental Vision VSP Alliance to the Principal VSP Alliance.
Got it.
I did have a question on the dental. I don't have it outlined on the vision. The enrollment's completely different numbers. For example, for the health,
Yep, yeah. So it's a total separate election. Employees can take full family medical, but maybe they only need employee only for dental.
okay,
Every plan is a separate election. It's not tied together.
alrighty.
Does that make sense?
Yep.
Based on what their needs are. So
Yep.
someone may waive medical and then dental vision, because they get medical somewhere else.
Okay,
Maybe it's your Medicare, another employer, or, does that make sense?
yep.
So at what point are we to where this has to be decided? Yesterday?
No, well, we are in August 1st.
Yeah,
We're on
but she
the
needs
first-
to take payroll deductions a month earlier.
So she's going to take it after the holiday.
Yes, she's ready to take payroll
Melissa?
deductions.
Okay.
So, yeah, I would say, like, if you had a situation next week, is that possible? If that's not rushing too much. It's really more trying to have payroll ready to go.
Yeah.
And then, yeah, with the schedule open enrollment for employees to, you know, convey the new benefits, you know, potentially a meeting, if anybody has questions, get everybody's whatever plan they want, get it into Anthem. And then for folks who are changing plans, that will generate a new ID card that will be mailed to their home and get that set up. And then we also talk about HSA vendors in terms of, you know, if the town wants to use the local bank or whatever bank you're working with today for your business purposes, or if you want to consider a credit union, we talked about those options. That's a separate decision. Or the town, we have some clients that are totally agnostic now on the HSA and tell the employee, you go get your own and bring it to us because we just need your account number, routing number. But if you do that, we do recommend, you know, having a test that this is an HSA account because you're taking money out of a paycheck on a pre-tax basis and funneling it into an account that's supposed to be HSA. And if you're letting them tell you that, you know, you just run the risk with the IRS if you ever look through a deal on it. So
It's better to have one vendor.
Yeah.
So, you know, so most clients still endorse one vendor, but we do see some clients offering more flexibility. It's really your call.
So you also got, I know you reached out to a few, and Melissa reached out to a few.
Yeah.
And it sounded like, I think IMCU had the
I see
better
the numbers credited.
interest, what, like 0.75% or something like it.
Yes.
Was it?
Yeah, they have a competitive product. There's really no fees to it. They have a decent interest rate on it. It's just shy of 1% regardless of your balance. And they do have investment options if you want to invest money after a certain threshold is in your savings account. And I think the investment fee was like, I can't remember exactly, it was 25 or 35 for a year. But you can put money in a bond fund or a stock fund, or just like, you know, John was saying, if you want to try to get a better rate of return on your money. But then leave some in the cash account if you need to pay a bill or get a prescription or pay a dental bill or get some glasses. So yeah, but pretty much every financial institution, I believe, offers HSAs nowadays. It's pretty common. But you can, again, you have choice who you pick and say, this is the one we endorse. And I know we shared information about IMCU with them. We recently did a couple clients with them just because they like the low fees and and you could go into a branch. One difference I noticed with credit unions, you can go into a branch and do some of the banking, where some banks don't allow it. Like, I know BMO and PNC, like, they don't want you to come to the branch, they want it all done online on your phone or tablet, or, they don't want the stores dealing with that, where it seems like some credit unions are more flexible, forum, members, otherwise, I was gonna say TCU, but it's otherwise, so, but again, it's your choice, you can pick whoever you want.
Personally, I think the dual plan is the best route to go. It gives the employees options of their own healthcare and insurance. I completely understand where you're coming from as far as the carve out or the spousal.
I'm not suggesting.
I would like, if we're going to do that, I would like for us to consider it next year. Because if you go to a family of one of our employees right now and say, well, we've had to make this decision and now your wife has to get her own insurance and it's $500 a month out of your pocket, we could cripple some of our employees. Mm-hmm. If we did something like what John's talking about, and there's a portion of it, but we can tell them ahead of time, you know, okay, we're gonna switch next year and it's gonna be a little different, so prepare as well as you can, because it might be $100, $200 a month. Right. At least you're not throwing it on them and springing it and they have no, you know, it's a we're screwed type situation and they don't have a choice, but it's a valid, absolutely a valid.
I'm just asking questions. I'm not, I tend to agree with you that I wouldn't want to do it this year, but if we get another 28
Absolutely.
or 16% increase next year, I think we're going to have to.
Yeah. So what do you need from us at this point? What do we need to do?
I just think we need a formal vote by the council in terms of what options to go with. For really, we're talking medical, dental, vision.
Okay.
So again, I think the proposed was this dual option we're reviewing here together. The proposed contribution schedule, you know, what the HSA contribution amount you want to include. If there's going to be one for employees who like that option, you know, confirm move dental vision. From Delta Dental, our current vendor, the principal, and then our life and disability are all with One America. There's no changes there, so just confirmation. What was recommended is approved, and we can move forward and make it happen.
Well, and I guess I'd come back to one of the things John said, as far as the HSA contribution, I think 1,000 makes sense.
Okay.
Do we do it 500 plus a match of every dollar passed, or how do we want to do that? And do we do it in a lump sum, or I guess if we're matching contributions, you almost have to do it on
Well,
pay.
you can do it both ways. You can say at X point every year you get this amount of money, and then you set up for the match. And it's basically, you know, they just deduct from payroll, goes into the HSA, we just record what they are contributing, and then if it's up to $500, it's dollar for dollar.
So one thing I mentioned about HSA limits, they're based on calendar year IRS, sets them every calendar year. So one thing you can do is say, well, $50 a month or $80 a month for the rest of this year, and then for 2027 we'll give this amount, and then you decide how to break it down, monthly, per pay. Just as, because technically, if we make this plan change, folks who go to the HSA account, if they wanted to, they can max out to the contribution limits for the 26 calendar year, and then they can turn around in January and max it out again if they're amazing savers. Not that they can or want to or will, but since the HSA limits are on a calendar year basis, something to think about. Maybe say, well, this is what we tend to do annually, but for, you know, August, September, October, that's like how much for the rest of this year, and then, does that make sense?
So what if we were to say, because we've got, what, August, September? 5 months left.
Yeah.
Okay, so what if we split the difference? Okay, for the rest of this year, we're gonna put in $250. And then for every dollar you save, we'll match up to $250. We're covering the rest of the year. Then
get you.
January,
Then next year,
we do 500 at the first of the year, and then we will track, or I guess they will track somehow your contributions, and we will match up to $500. Because then we're only, for lack of a better term, on the hook for the $500.
Well, that's why I had mentioned payroll deduct. If you choose one vendor and payroll deduct, we know what they're paying, so we know what to contribute.
Right. And the employee does want to make it, it's beneficial then to make it to a paycheck because they're avoiding all state, federal, local taxes immediately. But there's nothing that prohibits him or her to go into the institution and take post-tax money, put it in, it's gotta claim it on their tax return. There's a dedicated line on the 1040 now
Yeah.
for that.
And that's not hard.
Choose to do that.
We did that a number of times over
Yeah.
the years. Yeah.
I know with mine and my wife's both, they went into a savings in an institution. We never got the money, but it was there. We had a credit card, so to speak.
That's exactly what it
And,
is.
Yeah, and that worked out great. Then you didn't have to worry about shuffling or, oh, well, I can use this somewhere else. It automatically goes in.
Right. You just gotta remember to claim it on your tax return, so you get the tax benefit in
Yeah.
April of that next year.
Well, and I think as much as I might like to say otherwise, I think if the credit union that you're talking about will allow employees to actually invest that money, I think that's a good option. I'd like to say that where I work would do better, we don't have that option. That's a good option that we ought to offer. Is that IMCU? Is that?
IMCU, yeah,
Yeah.
we'll share information with the link and the contacts.
Yeah.
They have a pretty robust HSA product.
Yeah, that's neat. That's neat.
So,
Any other questions, comments? Do we have a motion to go a certain?
So is that all fully settled? We're gonna do the HSA split as we discussed, at half the year this year, full year next year.
And offering the dual
Right.
programs.
And do we pick IMCU as our vendor right now?
I
Okay.
think that's a great idea. And
Yeah,
then the
there-
vision and the dental.
That was principal, was that the?
If he's recommending IMCU, then that's fine,
Yeah.
because they are good, especially with smaller organizations.
Yes, yeah, and then it's a nice option to be able to put that into the market if you want to.
Yeah.
Yeah, I like that.
and dental vision principle like that about.
Yeah, good with that.
All that said, I'll make that motion.
Have a motion by John Purdy,
I'll second.
second by John Schlosky. Any other questions, comments?
When do we want to discuss how this is paid for? As far as the increase, is the town absorbing the entire increase? Is it being split?
Well, I think if we leave the percentages the way they are, at least for now, it'll still be a split, because the employee's gonna pick up 20% of the increase, we're gonna pick up 80. So they're still gonna be picking up part of the
Okay.
increase. And then we need to, like I said, before we go through this again, discuss if we need to carve out some different things for next year, but,
Okay.
so are you okay with that?
Yep.
Okay. We have a motion to second. Any other questions? All those in favor say aye.
Aye.
Opposed? What, you have a question?
Motion and second.
John Purdy and John Schlosky. Okay. Thank you. I know you guys did a lot of work on that. Appreciate that.
And to clarify, the motion was to go with dual program for the insurance.
Mhm.
250 HSA this year, 500 next year, using principal for dental and vision.
Yes.
And match.
And yes, and a match
So
on
250 match, next year it goes to 500 match.
up to. We'll match what they contribute up to 250 this year, up to 500 next year.
Okay,
And
So it's a lump sum of 250 now and the potential match of 250.
Right.
okay. Lump
For
sum
this
and
calendar
a
year.
match.
Yep.
Yes.
Lump sum and a match of 250 this year, lump sum and a match of 500 next year.
Yes.
and IMCU as the vendor. I think it makes sense to have a single
Yes.
financial
Oh,
institution.
absolutely. I can't even imagine the payroll nightmare
Oh,
for
that'd
that.
be, Melissa would come in and shoot everybody.
Oh, we can't have that.
Okay,
Are you good?
yes.
Okay.
That was a good one.
All right. We're having such a good time with insurance, property and liability. Oh, goody, more books. Hopefully these are not in large print. Bob, thank you. Appreciate it.
Nice job, thank you.
Oh, thank you.
Over here, is this large print, John?
I know.
Look
at that.
Thank you.
Councilman Perrin, I know that you thought golf carts were going to be a topic of discussion, but these folks are here to talk about liability insurance.
Riveting.
Hey, we're here this evening, first off, I'm David Wade with Gibson. I'm also here with a couple of my teammates here in our public entities vertical, and then we've got a couple folks also from Bliss McKnight. Brought the whole insurance team tonight, but we are here this evening to share our proposal for the town. We have spent the last 2 months getting to know your risk profile for the town of New Whiteland. We knew a little bit before, now we know a whole lot about the town. In that short amount of time, we've met with all the department heads, we've met with several of you in the council, we've of course met with Dwayne and Matt, and we have done a qualitative assessment so that we know exactly what the town's needs are, what your risks are, and then now we're using all that data to fit a program that makes the most sense for the town. We have 2 goals in mind. So primarily, we want to save the town as much money as possible on insurance. How can we make your spend the smallest it can possibly be as you continue to grow? And then also number 2 is that we make sure your coverages are appropriate. Spending this money on insurance, it's a pretty significant number. How do we make sure that the products you're buying are tailor-made for what the town needs? Nothing more or nothing less. A couple things about the expiring program. Our partnership began because, and we don't, not here to rehash, but I want to kind of leave the smallest bit for the public to understand. There were some issues with service things, timeline things. We found a few coverage gaps that we'll talk about briefly tonight. There were billing issues, data management problems. So that's all of what we do. We are not, Gibson is not the insurance carrier, we are the broker. We represent the town, we go to market for you. We leverage everything that we have at our disposal to bring the town the best possible insurance outcomes. We do represent most of the municipalities in Johnson County, and so we're happy for this new partnership. So also about your program, when we came in, there are different effective dates for different lines of coverages all over the calendar. What we've done tonight is we're going to put all those together. Fewer meetings, less confusion, let's get it all uniform in one single place. We have just a couple of other things about our team. We've been around for almost 100 years. We specifically focus on public entities, municipalities. We know the space. And so we're very comfortable here. The 2 biggest changes for your program that we're proposing tonight, and I know there's a lot here, we're absolutely not going to go over it. I might talk about 2 pages. Any questions that you have, though, we're happy to do that in this format. But the 2 biggest changes that we had, the program, the expiring program, is with Tokyo Marine. They were a carrier who basically had a package for your property and for your liability. What we've done is a full exhaustive marketing effort, and our proposal tonight would include taking that and splitting it up and having your property with a carrier called Cincinnati. Again, a national A+ rated carrier. We do more volume with them than any other carrier, so that's going to be reflected in your rates. And then also Bliss McKnight, who is a municipal carrier only. And they operate in Indiana and Illinois. They cover all kinds of counties, cities, towns, fire districts, any kind of public entity in this state. They're the only AIM recognized partner carrier, and they've been that way for 40+ years. I'm emphasizing that a little bit because I think there were maybe some accusations or things that came your way about carrier partners. Gibson doesn't just throw you with anybody. We want you to have the very best carrier. That means who understands the space, responds timely, handles claims, fights where it makes sense, and is the best possible carrier partner. Bliss McKnight is currently, we have them with a ton of our municipalities, but your closest neighbors who use them, City of Franklin, Town of Trafalgar. I know you called our references. Thank you for doing that. They are thrilled with Bliss McKnight, both of those. If you talk to Mayor Barnett or Brian Gregg, they're just going to sing the praises. So we bring to you our very best tonight. Another thing, briefly too, comp structure. The way that insurance is usually set up is that the more you spend the town, the more that the broker makes. Okay, so your rates go up, I'm getting paid more. That's kind of backwards. So what we propose and what we do with a lot of our municipalities is we operate with a fee structure, very predictable. Same this year is the same next year, and we are incentivized to drive your rates down as far as possible. So that if we save you a bunch of money on, say, your workers' compensation, we're not getting paid less. It's the fee is what it is, and what we've come up with is similar to what you could expect from your previous relationship. If you turn to page 4, here is a comparison of what your expiring program is and what we came up with apples to apples. So I'm sorry if I buried the lead here. The bottom line is that we are not proposing anything that's going to make the town spend a lot more money. You can see here on page 4, there are 3 kind of gray shaded areas in this premium analysis. The one on the far left where you can see expiring 171,220, that is your expiring program before Gibson. This is what you've got right now in the far left category, 171,220. On the far right gray box, this is if we do an apples to apples, hey, let's take exactly what you've kind of got now. We've switched to Bliss McKnight in Cincinnati, where we landed is 164,453. This is a savings of about $7,000. What we're actually, in the middle column, just for your reference, that is if the rates are the same with expiring, but we've updated your exposures, which means things like payroll, total insurable value, the revenue that the town's bringing in. If I'm moving too fast, please ask any questions.
I do have one overriding question.
Absolutely.
The coverage, you're quoting identical coverages. The amounts are the same, the bill, every property, every asset, it's exactly the same coverage that we have.
So, no, they're better. I'll go into a little bit of the details, the limits. What the town cares about is, okay, if we had a claim, an auto claim, or a use of force claim with police, how much money is in that bucket where the carrier will pay out? What your expiring program has, for example, on the liability is, I think it's a 1 million, 3 million, so that means 1 million per occurrence, 3 million per aggregate. What we're bringing is a 510 for your liability. I'll also say this too on the structure. Again, if I'm getting too deep here, but what your current program has is you've got your different lines of coverage and you've got an umbrella that sits over them. What we're proposing and what Bliss McKnight's model is a cool thing that's specific to municipalities, is that there are siloed coverages. So that say that you have a bad year, you had both a terrible auto loss and you also had a use of force loss in the same calendar year. Your limits can be eroded if one of those has a big claim and then, well, we had 2 in the same year, which is totally possible, but there's no money to pay out there. If you tap into your umbrella, it is no longer there for another loss. What Bliss McKnight does for all their municipalities is they don't do the umbrella, they do siloed high towers for each one of these lines of coverage, so that if you had, a $5 million loss in auto, you could also, if you still had a terrible year and another loss in some different liability category, the money's still there. It wasn't eroded away by an umbrella that covers over everything. So, yes, that's a great question.
So for clarity, there's not any point in this package where we're receiving lesser coverage.
Correct.
We're receiving equal or better.
Absolutely,
Okay.
yes. Look, we're not interested in savings with concessions.
Neither are we.
Can I clarify what you were saying on page 4?
Yes.
It's all the way to the right, 164, was if we were quoted exactly what we currently have with Bliss McKnight. But the one in the middle is adding the coverages that you think needed to be added.
The one in the middle is purely hypothetical. It's basically answers the question of if our rates were the same, but we were just cancel rewriting right now, what would it look like? What we're showing on the far right is what matters the most, because it's saying here's what, because of the work that Gibson's done and what the town has done in our partnership, this is where we landed here with 164,453. So, yeah, the middle is purely hypothetical. The far left is expiring, and the far right is apples to apples, no coverage concessions. But I do want to show you page 5 because this is our recommendation. Now, there are a couple things that the council will have to decide on tonight, so I want to be really clear in kind of where we're landing. And here's our recommended program structure. And there are 2 major differences here. And where you see from the expiring, of course, it's the same, 171,220. But the far right is about 1,300 more, $172,598. The two big things that are the difference here is when we investigated what your flood insurance looked like when we took over the program as broker of record, basically there were two buildings that were covered by the NFIP coverage for flood that were super low risk buildings. They weren't, when you look at the flood map, and we have this here in the appendices, there were two structures that were covered, wastewater structures, that were not in the flood risk area. What we have done after we ran all the town's properties through our CoreLogic technology is we have found that you were buying flood coverage, but essentially it wasn't going to respond. If the town was going to have a flood, what were the highest risk structures that were actually going to incur the damage? We found what those four were, and now we're just moving coverage to there. So it's on the surface, yes, you were buying flood insurance, but it wasn't toward the right structures. So we have changed that. And then the other thing is your accident and sickness policy. We're proposing a move to a different carrier, which is Provident. And you can see on page 6 a lot of the advantages that you get with the Provident plan for, again, minimal increase. But essentially what it comes down to is the Provident accident and sickness policies have much stronger benefits for the families of first responders, whereas the expiring accident and sickness was not nearly as robust. You can see we've tried to highlight there in that column, we've got IPEP/BFIS, which is current, expiring, and what we've highlighted there in the Provident Plan 4 is what we're recommending. Again, minor jumps in premium, but what we think is markedly different in favorable terms. As you look through this, what questions do you have for us? Liz McKnight's here, they're happy to answer any specific questions about their coverage terms and
Do we have flood coverage on the garage building?
Yeah, so the two buildings, that we had a flood coverage is, one of the garages down there and the biosolids and dewatering building, which actually, to be honest with you, in the wastewater project, a lot of that stuff's gonna go up out of the floodplain anyway, so. Those are the two buildings.
I think the one thing that has flooded in the past is that garage building, is that right?
Yeah, I think back in '08, I think.
Right.
Everything had flooded really since. So.
That was a flood.
Yeah.
some of these details are in Appendix A.
Well, so now they're quoting 4 buildings. They're quoting 4 buildings for flood insurance. Are you saying we only have 2 covered now? I'm looking at page 2.
Pretty sure that we only
Yeah,
have
there's
2,
only
right?
2 currently, but since I've been here.
But you're quoting 4, right?
Yeah, and when we dug in, if I may, and when we dug into the existing flood coverage, the actual policy was rated on 2 buildings that were in flood zone X. So like if you look at Appendix A and you look at that flood zone determination report, you'll see Zone AE is high risk flood. And so there's 4 buildings. There's the salt shed, the sand shed, the garage, and then the dewatering building are all in that zone. The policies, while they were named, I think the policy said like shop and solids building. The actual policy language was for flood zone X, which is low risk. So when we dug into that, we felt like it wasn't actually ensuring the highest risk for the town. So we went out and had this report pulled, and the coverages that we're presenting today are actually insuring against the highest risk. And those 4 buildings are indeed included in the coverages that we're presenting today.
That's $3,400 on those other 2 buildings. I don't know if that's, I realize in the grand scheme of things that's not much, but I'm not sure if those need to be insured. You said even in '08, just the garage flooded?
So I wasn't here in '08, but, '08 was the big one,
Right. Oh, yeah, yeah.
2009, we did have one in '09 again. I don't think it ever reached the salt and sand barns, but like I said, in '08, I couldn't tell you. I know that it got in the garage, I don't even think it got in the pile cell in this building, to be honest with you, in '08, but I know it got in the garage, because when I got here, it was still a mess when I started.
I'm just curious, like I say, it's
Can-
minor in the grand scheme of things.
Okay, I know we're still using salt for, even with the brine, but we're ensuring the sand shed. Do we even throw sand in it? I mean, is that even necessary, or is that just a,
Well, that was one of the questions that I was gonna have, even on the salt barn itself. Why? I mean, it's salt.
yeah, I mean,
Concrete.
it's an open area. I mean, how much are we talking about in the grand scheme of things? Is it,
The salt shed is $1,967 a year, the sand shed is $1,373. Like
And
$3,200, $3,300.
Worth noting that, to your point, none of these are mandatory on our end.
okay,
But it is worth noting that the property policy with Cincinnati will have no flood coverage. So if we wanted to make sure that the like if you look at that flood map in Appendix A, and you're looking at that, you're saying, okay, there's 4 buildings in the highest risk flood zone. We felt it was our diligence to at least give you an option to make the choice to insure those 4, and just knowing that any flood cover is gonna be excluded under Cincinnati. So, but to your point, not mandatory, totally at your discretion.
because honestly, if the dewatering building is gonna get changed anyway, and I think we've pretty much moved everything of any substance out of the garage building that always floods. Is that, did we not?
Generally, it's still in there, but generally what'll happen is if we are forecasted heavy rain and we're expecting that, we're moving stuff. Cause we have no place to put all the stuff.
Right,
I mean, you've got dump trucks and
yeah.
the other equipment in there, so all that stuff generally gets moved out.
Well, I guess my question is it a substantial enough savings to take the risk?
So all of the flood coverage is $9,900 a year. So it's 10%, 9% of the, no, less than that, somewhere in that range though, of the total premium.
And right now, you're paying $3,000, right around $3,000 for flood at 2 buildings that are rated low risk. So it's a delta of what, 6,000, to make sure that your highest risk is covered. But again, those 4, on page 2, where the flood's broken out by annual premiums, we can cherry pick those. Those are all separate policies. So if you just want to insure 1 or 2, or however you guys want to move forward there, we can do that. And it's worth noting too, with regard to the flood, that David mentioned earlier about getting all of the effective dates to 7/7. We've been successful in that across the board. The flood, because it's through the National Flood Program, they have a 30-day waiting period. So coverage begins 30 days after payment is made. So right now, as it stands, the flood coverage on these low-risk buildings that's currently in place, that's still in force. We haven't taken any action against those. For this new coverage, whatever we would decide, we would put it into effect. There'd be a 30-day wait period after payment is made. And then we would, with your approval, do away with those lower risk flood policies if we move forward with the current strategy that we're proposing.
Are you thinking maybe no flood insurance at all, or what are you thinking?
It's probably best to leave it on it. Matt just brought up a good point. We think of salt and it's just a storage salt. But what happens if we do get that flood and that salt goes into the creek, and now we've killed a bunch of fish and various different things like that, so.
This isn't gonna cover that. This is gonna cover your structure.
Is that all?
That's all it's gonna
The
cover?
building and the contents.
Yeah.
If there's no pollution coverage where it affects.
Hopefully that's somewhere else in here.
I was gonna say, for the dewatering, I know this, so the project that we're discussing later, that moves, but when does that move?
So, I'll just say 15 months. So
Okay.
year and a half.
And if it floods, are we losing structure
Uh,
or damaging structure.
You are, if we lose that portion of that process, there's a lot of money that's gonna have to be spent out to get rid of
Okay.
solids.
Which, so that was kind of what I was thinking when we were discussing, do we drop it all or what?
Okay,
So the salt and the sand and the garage, the garage, you're already making adjustments if rain's expected, heavy rain. Salt and sand, we're not really covering, we're not seeing a good benefit, but I think the dewatering we keep. At least until it gets,
So at least into probably next year.
yeah.
Dewatering and garage building, those two.
Yeah,
Okay.
I mean, if we can do just those two buildings and then work through this project, cause it's gonna be an annual thing. You know, you may come back next year or probably the year after if it's 15 months and say, okay, this building's way up here now. It's not in the floodplain or, you know, flood zone. Now we take it off. That would be, because honestly, we're not talking about a difference in premium over what we're spending now, really. So if we're staying apples to apples, but we're getting better coverage, I would be okay with leaving it for now on just the two buildings and then revisit it when the dewatering building's moved.
So with the flood, you're talking about equipment that's in the buildings in the floodplain, is that covered by flood
Yes,
insurance?
building and contents.
Okay, but not the salt.
Well, I think the
Probably
salt,
just the replacement of the salt.
I just wanna make sure.
yeah,
I'm
but
clear.
I
just
think the
wanna make sure I'm
salt
clear.
would be, the replacement of the product would be,
Because it's contents,
but not
okay.
if the product got into something else and contaminated the creek, yeah.
Well, and for clarity, I don't know how much equipment's in that building, but the maximum flood payout on any building is 500,000. So if there's $3 million of equipment there, we've still got significant exposure.
Yeah, you probably, I would,
But I mean, it's better than
we're in the
nothing.
process of replacing it,
Right.
right?
Isn't the salt like several $1,000s? Isn't the salt several $1,000s?
Well, the replacement
Yeah.
was $4 million.
I think that would be almost just shy of thinking that's a lot of
Right,
to replace
right.
it, so.
But it's better to ship stick behind.
So are we good moving to the two buildings then?
Yeah.
Okay.
Yeah.
Perfect, and then, I think the other piece of that is just formal approval to do away with the existing two that are in low-risk flood zones. We would need approval for that as well.
Okay. Somebody wanna make a motion?
I'll make a motion.
What are we, we're.
Just
motioning
doing
this
away
one?
with those two
Just,
buildings.
Oh, I got you, okay.
Yeah,
And I will second that.
okay. All right, all those in favor say aye.
Aye.
Opposed? Okay. That's all we changed.
Yeah.
So the accident and sickness proposal that we had as well, that's again, but mostly page 6. You can see the differences there. In premium, for example, I think most recently, Parkersville Fire Department switched to broadband from BFIS. When we first brought this to them, they said, absolutely not, we're only BFIS, we will not move from them. And then we showed those terms, they moved to broadband. So, yeah, you can, some of the terms, some of the wins on terms are highlighted there. You can also see on page 7 of page immediately after some more details on how it affects families that are purchased homes. But really, you're looking at higher limits on a lot of these.
And then to piggyback on that, on page 3 too, there's some more narrative around the improvements. So for what we feel is a negligible increase in premium, you're getting some, like David mentioned, increased limits across some of the things that you'll see on page 6, but then also you're getting a cancer diagnosis benefit, which is not currently included in the BFIS program, which would be a one-time amount paid out if a fire or police employee is diagnosed with recovered cancer to provide immediate financial support to the family.
Does not have to be caused by, or it doesn't have to be determined to be caused by the job.
Where is that? I'm not seeing that on,
On
Page 3.
I'm sorry, which page?
On page 3, there's a narrative.
Gotcha.
Page 6 kind of highlighted some of the coverages, and then page 3, we wanted to call attention to just some of the more, what we felt
Oh,
like
okay.
were higher priority improvements. the worst case scenario. And then same with the health insurance premium protection too. So what we felt like were some significant benefits to the families of the employees and the responders that we felt like was important enough to call attention to.
And the cancer diagnosis, what is the financial aspect of that?
15,000. Oh, as far as a benefit paid out?
Yeah.
15,000.
15, okay.
So the biggest change in the premium is to switch to Provident, which increases the police and fire benefit. Everything else, we're getting better coverages, but everything else stays the same premium wise. Basically. So for $1,100, we're increasing.
You're talking about the difference between these.
Yeah, that's the only thing that increases
Right.
premium wise.
But I suppose the flood reduction they just made is a little more than that.
Yeah,
171.
they should even out, I think.
Yeah, they hired us for not to take the same premium we had with.
Yeah, if we're getting better coverages for it.
Yes,
You know.
because that proposed 172,598 includes all 4 flood policies. So it will go down.
Right. That'll go down
Okay.
by 32.
Okay, so,
We're gonna land in a spot that's less than expiring.
okay,
With better coverage, more limit. As David was talking about, those silo towers of coverage, which is super important for municipality risks. Several improvements.
okay.
We are in a situation where we have to decide tonight.
Yes. Yeah, because this is expiring. Well, and I'm gonna go to the fact that I know Angela's done research, I've talked to people, and you know, I don't think everybody in the county would have switched if it wasn't a good program. So just for my 2 cents, I think it's, you know, there's enough people that have used it in the past to make it worthwhile.
Is that a motion?
Okay, sure, I'll make a motion.
All right, I'll second.
Seconded by John Purdy. Other questions, comments, or discussion from the council? If not, all those in favor of accepting Gibson's proposal with Bliss McKnight, signify by saying aye. Aye. Opposed? 5 affirmative. Thank you, guys. I know it was kind of an ordeal getting through stuff, but thank you.
Is there any other insurance we can talk about?
I mean, we're pretty much it all. I certainly hope not. And I know all of you guys really want to stay for all this, don't you? Insurance folks.
All right, if you insist.
Yeah.
Thank you.
Thank you. Appreciate it. Okay.
It'll be almost a $2,000 savings.
I'm sorry.
It'll be almost a $2,000 savings after we drop those 2 from the flood.
Good. Thank you, guys. Okay, the Granger emergency purchase, Matt.
City didn't allow, I think it was last week, you guys kind of approved it, just to kind of ratify that decision, I guess. Give you, I guess what it is, it's a cooler basically for a electrical panel for the UV system that went out. With the heat now, it's basically, it's off right now because, when we were in the 80s and things like that, we were able to kind of keep the doors open and keep it cool that way, but we aren't even able to do that. I'm expecting it, hopefully, it's supposed to be here by 2 p.m. tomorrow, so that'll be something that we'll install ourselves and things like that. Easiest way to put it is it's a glorified window air conditioner, just sits on the side of a panel, so.
Okay. And I know it was close to your allowable amount.
$8,261.93.
Okay. Since it was over his allowable. I think we need a motion to approve the, allowing him to
So
purchase
moved
it.
for the
Schlotski.
purchase.
Second.
Second by Chad. All those in favor say aye.
Aye.
Aye. Opposed? 5 affirmative. See, now we're moving right along. Budget hearing dates.
I've supplied everyone with a paper that looks like this, with yellow highlighted areas.
Can you tell me what I did with it?
Should have been under your agenda. This is,
Got it.
Under what?
make sure you found it. I think I have that.
Thank you.
I don't walk away with it. I gotta put it on my calendar.
You guys have never had so much paperwork up there before.
I do have
big
some,
night.
some extras.
No, I found it.
You found it?
Yeah, Perrin didn't, but he can look at mine.
Okay. I had my first budget meeting with Janet, and these are the dates that we were proposing to get our budget approved. Usually, so it's due, I think, November 3rd or 5th, somewhere in there, like the first week of November. But we try to aim for having it approved by our first meeting in October. That gives us time if anything comes up and we have to move it to November, we're still okay, but we like to kind of be a month ahead of the game. And then this also adds the September 16th special meeting with our department heads that we normally do, and I wasn't sure if that date's okay with everybody. We always change it.
Is that a Wednesday?
Yes.
Yeah. Does that, I know it's still a ways out, but does that work for everybody in theory?
In theory, yes.
Okay.
In theory.
Just backing you up.
5, or do we wanna, do we need to move it up? Because, well, we've only got 1, 2, 4, 5.
We could just keep it at 5.
Okay.
If we get closer to it and we need to change, then
Okay.
we can do that. So, I just wanted to bring that up, and the budget stuff is starting, and
So then our expectation is we'll see the draft budget on August 14th?
yes.
Okay, good.
Good deal. Any other questions?
No, sir.
Very good. Okay, go ahead, kid. Let us know how the audit went.
Okay, so now, let's go. Oh, here, you want?
No, you're good, you're good.
Okay.
Oh, it's not August yet, so it's okay.
It's for the, yeah, so, when we had the audit exit meeting, it was with, okay, John Purdy was there, I feel like Dennis Gomes was there, okay. It was confidential until they released the report. Well, they released the report, which I've shared it with everybody here, and we had another perfect audit. So, and I just wanna say that that is reflective of everybody in the office. That's not just me, that's everybody, because everybody in there tries to do very accurate work and do everything on time and all that. So I think we have a great team. That's why we got a good audit. So
You mentioned earlier in the executive meeting, there was one thing with regards to CCMG that you feel like you've got a beat on. It wasn't in the report, it was a verbal, but you feel like you understand it and you've got a beat on it.
well, so they have 3 different types of errors. The first type, they'll give you a verbal, and then it's written, and then it's on the report. In the previous audit, we got a verbal on CCMG. I think we paid, it was less than $2,000, but we paid less than $2,000 extra, and it wasn't, the record keeping for that extra wasn't there.
Yeah.
So then this time, we had a change order, and I didn't have the paperwork for it. And so this time we got it written for that, and it's a learning experience. I actually love audits, because to me it's a way to tell me what, how to do my job better. And so now going forward, when we have CCMG, we're just gonna really make sure we dot our I's and cross our T's.
Blame Matt and Dwayne, I mean, that's what I take out of that. But, and when you say written, it's not in the audit report.
No, it's not
written
in the audit report, but if we have anything, any kind of error on CCMG on the next audit, it will be in the final report.
So again, I agree. I think it was an excellent audit. It was the second one in a row that was that's darn near impossible. I think, John, you've had some exposure to that too. That's an excellent outcome.
They've said that that's very rare. I mean, their job is to find things that are wrong, and they like to send people to New Whiteland that are in training because we're organized and all that, and they are more easily able to train people.
What's our hourly rate for that? Sorry.
I will say we do have to pay a certain amount, like the audits are required, but we have to pay. But in the exit meeting, he was explaining what they budgeted, the amount of time they thought they were going to spend here, and it was less. So we're going to be paying less than what they thought, because when they ask for things of our office, and like I said, this is not just me, this is everybody. But when they give us a list of things, we're getting those items back to them as soon as we can. So it just makes the audit process go a lot faster.
Great, well, congratulations. That's wonderful news.
Yes.
And they do in fact find problems when they do audits in other towns. I can.
That was one of the questions. This was the first time I got to experience this. And I asked the gentleman that had done the audit, do you frequently find things? He goes, oh yeah. Oh yeah. So it felt really good being a part of something that's on the good side of that.
I agree.
Great. Okay, moving right along. Fiscal plan for M&I Homes.
Me? Well, Adam Stone's not gonna be here, and I don't think he was really intended to be here, but in trying to prepare, stay a little bit ahead of the game with a potential new development. We've gone through, John Purdy, you asked about a traffic study. We've done a traffic study to help us identify costs associated with TIF district and various other things. But as part of that as well, we will need to have a fiscal impact. Is that what it's called? Fiscal impact. We will need to have that fiscal impact study done. Wow, I can't freaking talk. And that's what the proposal is tonight, is to do just that.
And M.I. Homes is agreeing to pay for it.
Yes, there you go.
And that traffic study makes better sense now, because we've got to show a financial impact to the town, therefore the TIF is justified.
Correct. That's exactly right.
Good. Okay, thank you.
Did you say M&I Homes is paying for it?
Yeah.
Okay.
Well, that changed from the email that I read today, didn't it?
I think they're.
Or
they
they've
have
been
two
willing to
different
pay for it
things.
all along.
Well, was there John Purdy asked a question about the traffic.
Right, there's a traffic study that we did.
Right.
Because, they're gonna advise us on how to set up and get the TIF approved. But one of the things Adam told us last time he was here is the town has to be able to show that there's a fiscal impact to us. That's what, I think that's what the traffic study's for, to show that we're gonna have 15,000
That clears it up on my
new
part.
cars every hour on the road. And
I just need John to translate every once in a while.
Yeah.
So we're still gonna pay it, they're gonna reimburse us?
I don't know. I think.
The way this is set up.
Well, it is. It is.
Attorney does
It is. He's providing this service for the town. The town needs to formally engage Adam Stone to provide this fiscal impact study and report. Ultimately, the cost will be borne by M.I. Homes.
Right. But
So I think your action tonight is to approve his statement of work.
Yeah.
And accept the terms and conditions of the aforementioned project by the town of New Whiteland by the Stone Municipal Group and authorize John to sign the agreement.
Yeah, that's
You have
the,
a copy.
yeah, that's the agreement for 8,500.
Yes.
That's it, that's a flat fee.
and the
It
TIF,
is.
if we get it approved, is significantly beneficial to the
Yes,
town. So
absolutely.
I think it's good money.
I was gonna say, I will make a motion
Okay. motion
to
by Dennis,
accept Stone proposal.
I'll second.
second by John Purdy. Questions, comments? All those in favor say aye.
Aye.
Opposed? 5 affirmative. Were you guys just extremely bored and you came back, or what?
We missed you.
Wow.
Oh.
I figured your car was broken down and we have air conditioning.
Angela, any other new business? Lee, Chad?
No.
John?
Nope.
No.
Nope. Matt? Dwayne? Oh, of course you did.
Hey, I took one off.
We were on a roll.
It's appropriate for me to add something.
We were, just to let you know, we were this close.
to be honest, they probably should have been under old business. This is some stuff from GRW regarding the dewatering project. If you remember, we had, I guess, authorized them to do, the preliminary design, the final design, and the bidding. And there were two other things left on their proposal that needed to have authorization from the council, and that was construction administration services and construction observation service or inspections. That is all it's all built into the total project anyways, into the cost with the bonds and things like that. So it's kind of a formality, but I need, I guess, a signature from one of you.
Do we need to?
I don't.
Won't do any harm.
Okay.
No, I mean, yeah, if somebody wants to make a motion that they approve the signature, let's do it that way, just to make sure it's on the record properly.
And I can tell you the cost of it as well. You knew what the cost was when we originally did it. So the total amount going to GRW was $343,600, which a portion of that we've already done with the design. The construction administration is $95,000, and the inspections was $80,600. Like I said, again, this was already built into the project, so it's not anything coming out of a budget or anything like that.
Okay.
So,
Do we have a motion?
I'll make a motion.
Motion by Chad,
I will second it.
second by Dennis. Questions? All those in favor say aye.
Aye.
Opposed? 5 affirmative. Anything else, Matt? Dwayne? Dave? Joe? You awake back there, Papaw?
Yeah.
Okay. Ordinance 2026-01, new sewer rates.
So at your last meeting that I missed, you talked about this, and Bob Reynolds presented his rate study. And I went back, looked at the minutes, and talked with Angela, and here again, she did a real good job of sorting out what did happen and didn't happen, and is trying to make sure we have a really good record. And so we need to tidy this up a little bit. At your meeting last month, after Bob made his presentation, you all decided to spend $1 million of the town's money derived from the sale of the water utility on this sewer project, and you decided by vote to have the sewer utility spend $156,000, something like that, $1,000 of its own money to pay for engineering costs. And then you approved that, and I think John Purdy fashioned a motion that approved the rates that would be the product of those decisions and the town's sort of use of its own money to reduce its indebtedness. That all got done. But there really wasn't a motion made directly to approve the rate ordinance itself, and we didn't have the right appendix to attach to it that night that showed a rate that was consistent with the other decisions to spend some of the town's own money. And then also tonight, when you decided to purchase the bond insurance, the rate dropped a few cents. So we now have an updated rate based on your decision to buy the bond insurance. So what we need to do tonight now is adopt ordinance 2026-01, which is the rate ordinance for the sewer utility. It is it's 7A, I think, on your email, but it is 2026-01, ordinance submitting the schedule of rates and charges for the new line down sewage works. It was introduced at the May 3rd meeting and is presented for adoption tonight on July 1st. And on the email that Angela sent out as sort of the final updated agenda and documents going with it, the correct appendix that goes with this ordinance appears under 7A that says rate ordinance appendix A. In your first column, it's the second to last item in the first column of the email. It will be a phase one rate of $7.46 per 100 cubic feet per month. Phase two will be $8.35 per month. That's the one that we need to attach to this ordinance. So if all that makes sense and you're so inclined, I need a motion to adopt ordinance 2026-01 as presented.
No, there's two appendix A's, one with insurance, one without. So
This
they
should be
adopted
with
it
insurance.
Yeah, right.
And that's the one that
Because
is,
the insurance was approved
yes,
earlier in
Right.
the meeting.
right.
And yes, I have both just in case, so.
But the one that's, the one I just mentioned, I mentioned those two numbers because those are the numbers that are reflected on the one with insurance. But that's the one you're adopting.
Okay, we have a motion.
Motion to accept ordinance 2026-01.
We have a second.
I'll second.
Motion by Dennis, second by John Purdy. Questions, comments? All those in favor say aye. Aye. Opposed? 5 affirmative. And we have 2026-03.
Same thing. At your last meeting, you voted to commit $1 million of the town's money derived from water utility to this project and to have the sewage work spend its own money to pay engineering costs. You took the vote, but we need to adopt a resolution that formalizes that. And this resolution 2026-03 does that. It makes mention of the project, the total cost, that we sold the water utility, that we have a little bit of money to spend, that the council, in order to reduce the rate impact on the sewer utility customers, has decided to commit $1 million of the town's own money and the sewage works money of $156,000 to the sewer project. So
It was my motion to begin with, so I'll make it again.
I think I seconded it to begin with.
Motion by John Purdy, second by John Schlosky. Questions, comments? All those in favor say aye. Aye. Opposed? 5 affirmative.
that
Angela,
email
you
we
have
got
anything
from
else?
Bob of the 4 items. Have we got them?
No.
Okay.
So I was gonna ask, so the Bob ordinance, I know there was some things that needed to be.
That's all.
No,
that's all figured out.
that was just clerical
Okay.
typos and stuff. But thanks for mentioning it, but that's all done.
That's one of them. The other thing is they needed to pick what did he call it?
Oh, yeah.
The.
Good one.
The
The
registrar.
register and paying agent for the new bonds.
Yes.
These were sent out yesterday by Bob Reynolds.
And he made a recommendation because it was going to be, one was going to cost a little bit.
Yeah, so I think his
Where's that
recommendation
email?
was the BOK Financial. The acceptance fee was a little higher. It was $300 instead of $250. It was
Yes.
from the other two, but the annual.
The ongoing,
fee for BOK was $400 and then where it was $750 for the other two. So he said there would actually be a savings by the end of the loan if we went with BOK.
Yes.
So we need to take action on that.
I have one extra copy of the one.
Say I've got a copy.
Yeah, I attached to this email bids I received for registrar. I've worked with all 3 and they do an excellent job. My recommendation to go with Mark Hutch and BOK. What he just said, in the long run, the annual fee billing we will save money.
13.
Cannot be in attendance, and so, but that's his recommendation. And this is somebody that needs to perform a transactional function for us. And to his point, he knows them. We ought to hire the one that costs us the least.
And in your packet that I sent yesterday, there's 2 documents that start with the town sign. That's those documents, because it wasn't on the agenda, so.
Oh, okay.
We call them
They're in your
hashtags.
packet.
Yeah.
I'd make a motion that we go with BOK Financial.
Okay, we have a motion. Do we have a second?
Second.
Second by Chad. All those in favor say aye.
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 Opposed? 5 affirmative.
Do we need a vote on the parity document also? Is that something additional to sign another?
Oh, I know what you're talking about, I guess, is that the.
That's attached. Is that one of the items with the agenda?
Yeah, it's one with
Yeah,
the
yeah.
town sign. There was the,
Where,
Was it this one there?
no,
No.
What is that
That, right there, yes.
Okay.
Is that
LWG?
Oh, yeah, he needs to have, I don't think it's any more cost, but you need to authorize an expansion of his scope of service to act in this role. That's right, Goodland.
I do have that on my list too, and
Where's, the same email I was just looking at.
the one that said parity.
Yeah, addresses that. And I closed it, sorry. That was yesterday.
has to do with us having already outstanding bonds.
Yeah.
Things like that.
Do you need
It
to?
doesn't change the cost or anything like that.
Right, it says there's no additional cost.
No, right.
Because
It's,
it's a legal requirement.
it is.
Whatever he is, he has to work under the scope of what he's been authorized to do.
I think he's, something, and he's working in a capacity as a CPA and not as a municipal advisor, and we need to authorize him to wear that hat, I think.
And so do we need to take action on that as well?
Yes.
And the documents we have, they have draft all over them, so I don't know if we.
Why don't we approve it and ask him to issue a clean copy for John's
Right, and
signature?
then you
Okay.
sign it when I have it.
Okay. All right.
Motion to approve a clean copy of LWG.
Okay, we have a motion. We have a second.
Second.
Okay.
Okay, all those in favor say aye.
Aye.
Opposed? 5 affirmative. Anything else? Dave, have you got anything else? Joe? Okay, at this point, the meeting is open to the public. If you have a question or comment, we ask for your name and address for the record.
I think I'll be more public. The applicant, 103 Sawmill. I know you just said at the last meeting that you thought that drainage issue was, they were going to start soon, so all those big things were over there, so hopefully water issue is gonna start getting resolved. I'm gonna miss all my frogs, because I hear frogs all night long from all the water. I know you guys can't do anything about speeding up the roundabout, but what on earth are we gonna do with all this traffic for 3 years on Sawmill Road?
The traffic for what?
Your roundabout's not gonna happen until about 3 years, if I understood kind of some legality things. What are you guys gonna do with all this traffic that we're gonna have on Sawmill Road with, and really probably Tracy too, but, you know, all in that area with all these wonderful new homes that I say tongue in cheek, going in on Sawmill? I mean, that's 400 and some homes, there's roughly, probably what, 800 vehicles.
Yeah.
I mean, it's a madhouse trying to pull out my driveway as it is with
Yeah,
all the trucks, and you can't always see. I mean, it's unreal.
and to be honest with you, it's not just us. Look around, go out just a little farther west, and it's 10 times worse than what we're doing. Look at Bargersville right now. How many 3,000 homes they're going to put in? It's just,
And I got it.
it's
I
just,
mean,
yeah.
more, you know, I know you can't speed up that process. I understand.
Yeah.
You know, everybody's got to do all their stuff and things. Yeah, there's all that going on, but I'm not trying to pull out on my road,
Yeah.
on my driveway, all those other places. I mean, it's unreal. It just is unreal. These guys have tried to patch the neighbor's yard, or not the yard, but patch the road in front of their driveway. And probably within a day, because of all those heavy trucks,
Yeah.
you wouldn't even know that they did anything. And it's not for their efforts of trying.
Is there a certain time that it's, because at about 10 o'clock this morning, I came in and out of Bel Air about 4 times. I was all up and down Sawmill for 30, 45 minutes, and I never had to wait.
Come pull up my driveway.
Yeah, but
Especially in the
because
morning.
where you're at's right there by Bel Air. And that's why I said, that 10 o'clock roughly time frame, I
In the
never,
morning when people are trying to go to work.
Yeah.
Okay.
And
I mean, I don't mean that argument, I'm just
Right.
saying.
so
I'm
early,
trying to back
7
up my
o'clock.
drive, and I've got semis coming with more equipment. I got the humongous dump trucks that I have to wonder, because I don't understand. I'm a visual person as far as the poundage, but I see what that bridge is supposed to hold, or the whatever you wanna call it over there. I'm like, how much can that road hold? Because these trucks, you know, like, it's tons, I mean, it's just, it's nonstop. It's just.
And I get that. I mean, honestly, it's kind of the nature of the beast for the entire town right now. I mean, I live in the middle of town in the older section, and even trying to get out of my house in the mornings is getting a lot harder than it used to be. Even though we have that sign that we put up, you know, don't block Sweetbriar. Good luck. It's just, and it's not just us. I mean, if you go east now, everything's building out there, and for some reason, just because of the roads that are shut down, we've become the pass-through.
You're right.
Hopefully, once they finish whatever it is they're doing up on 31 at Worthville, hopefully that'll alleviate some of our issues. I don't know. And
I think too, you know, it can't happen very fast. It just can't. But based on the traffic study we have had done with regard to what's anticipated farther out to the west, and the idea that there may be a TIF district done, I think that's an opportunity. And I think the town will insist that, as a condition of future development, that there be more significant road improvements to handle existing and future traffic going forward. So this may present an opportunity that we otherwise wouldn't have had, but it's going to take a while.
Right.
yeah.
And then my last thing is, I have to keep my yard mowed, even mowing through and coming out with mud because of our water issue. Take a look directly across my street at 103. The weeds are above my shoulders. I'm 5'8".
At a residence or?
No, that wonderful development, tongue in cheek as I say, that's, you know, but they are. You come and sit right in front of my house, am I right? The weeds are to my shoulder across the street.
Okay, we can say something to them, absolutely.
Well, I know you mentioned something to Grass about it already. I know they mowed a portion of it.
Okay.
And things like that, so we'll make sure we say something to them.
Yeah,
again.
absolutely. Because honestly, that is, I mean, if you're going to build something over there, if you look at a lot of it, it's beautiful, but it all needs to be kept up, you know?
Well, and it's, you know, you wouldn't believe the amount of trash that's over there because it's growed up with weeds. We'll sit out on our front porch after the sun's kind of gone down and it's so hot on that west side. And constantly seeing people throwing Hardy bags, Taco Bell, constantly over there.
Yeah.
You know, so I mean, and it's because it's.
We'll talk to them. We'll talk to them about policing their area, which they need to. So, anything else? Okay. Anyone else? You guys are here just for the entertainment, aren't you? Wow. Being no other business, we are adjourned.